Have you ever wondered, when the economy gets a little shaky, how a global giant like Coca-Cola, a brand that's pretty much everywhere, manages to not just get by but actually grow? Well, their latest earnings report just dropped, and it gives us a fascinating look under the hood at their strategy. And honestly, what they're doing might surprise you.
Okay, but first we got to do the quick legal thing. Just a reminder, this is all for informational purposes. We're breaking down the numbers to see how the business works, but it is definitely not financial advice. All right, let's get into it.
So this really is the big question, isn't it? With all the talk about inflation and economic uncertainty, how does a company of this scale keep the momentum going? Are they just selling tons more sodas and juices? Or is there something else going on behind the scenes?
To get to the bottom of it, here's our game plan. We'll start with the big headline numbers. Then, we're going to dig in and find out where that growth is really coming from. After that, we'll check if they're getting more profitable. And finally, we'll look at what they're predicting for the future and, of course, that all-important dividend.
All right, let's dive right into Section 1 and look at the top-line figures from Coke's third quarter.
So, the first number that just jumps off the page is this one, a solid 6% growth in what's called organic revenue. Basically, that's the sales from their main business. And at first glance, that looks pretty good, right? More money is coming in the door. But that's not the whole story.
Because look at this. The actual number of products they sold, what they call unit case volume, that only went up by 1%. So wait a minute. If they're only selling 1% more stuff, where on earth is that extra revenue coming from? That doesn't quite add up.
And here you can see the puzzle laid out plain as day. You've got this huge 6% jump in revenue, right next to a tiny 1% bump in volume. That huge gap between the money they're making and the products they're actually selling, that is the absolute key to understanding their entire strategy right now.
So, let's solve this mystery. What is actually fueling Coca-Cola's growth? Is it price or is it volume?
Well, the answer is hiding inside this one key term from their report, price/mix. Now that sounds like some complicated financial jargon, but it's actually pretty simple. It just measures how much of their sales growth comes from 1, raising prices, and 2, selling a more profitable mix of things, like, say, selling more single, high-margin cans at a convenience store instead of big, low-margin multi-packs at a supermarket.
And here it is. This is really the aha moment of the whole presentation. Just look at this breakdown. Of their 6% revenue growth, a whopping 6 percentage points came from price/mix. That 1% from selling more product is practically nothing in comparison. The takeaway is crystal clear. Coca-Cola's growth isn't about selling more, it's about charging more.
You know, the company's CEO, James Quincey, he describes this as being flexible, and this quote really tells you everything. In a tough market, fiddling with prices and product mix isn't just one of their tools, it's become their main game plan for getting through these challenges.
Okay, so revenue is up because prices are up. Fair enough. But is the company actually getting to keep more of that cash, or are their own rising costs just eating away at it? Let's put their profitability under the microscope. And the answer is a resounding yes. Check out their operating margin, which is just a fancy way of saying how much profit they make for every dollar of sales. It's climbed from 30.7% last year to 31.9% this year. Now, that might not sound like a huge leap, but for a company this big, that is a really significant improvement in how efficient they are.
So, how did they pull it off? Well, according to them, it's a pretty classic formula. That strong revenue growth from higher prices gave them a huge lift. They combined that with being smart about managing their own costs. And those two things together were more than enough to cover the fact that they spent a bit more on marketing.
And that brings us to our final section. We've seen where they've been, but where are they headed? Let's check out their forecasts for the rest of the year and tackle the one thing a lot of investors really care about, the dividend.
Looking ahead, the company is signaling that they feel pretty confident. They're sticking with their original forecast for the full year, telling everyone they expect to land right in that 5 to 6% growth range. This tells us they believe this price-driven strategy is going to keep working for them.
But let's be honest. For a legendary dividend stock like Coca-Cola, this is the billion-dollar question, right? After everything we've seen, is that regular payout that shareholders count on, is it actually safe?
To answer that, let's just get a sense of the scale here. So far this year, Coca-Cola has paid out almost $4.4 billion in dividends. That is a massive amount of cash to send out the door. So the question is, can they really afford it?
And the answer really comes down to this one number, free cash flow. That's just the cash the business has left over after paying for all its operations and investments. And look at this. On one side, you have the $4.4 billion they paid out. On the other, they generated $8.5 billion in cash. They're bringing in almost double the cash they need.
So the takeaway here couldn't be clearer. Based on these numbers, that famous Coca-Cola dividend doesn't just look safe, it looks rock solid. It is very comfortably paid for by the actual cash the business is making.
So, let's wrap this all up with the key points. First, Coke's growth is coming from price hikes, not from selling more cans. Second, they're getting more efficient and keeping more of that money. Third, they expect this to continue. And fourth, that dividend is very, very well covered.
And all of this leaves us with one final and maybe the most important question of all. This strategy of raising prices is clearly working wonders for Coca-Cola's finances, but the whole thing depends on us, the customer. So the real billion-dollar question is, how long will people keep being okay with paying more? That's the tightrope Coca-Cola is walking into the future.